I wanted to cover a few of the interesting levels that took place today. Today is June, 25th, and we wanted to show how the market reacted to a bunch of our levels today. It was a pretty interesting day in the market. We had a pretty large sell-off yesterday of about 3%, and we opened below where we calculate our zero gamma levels. So what you're looking at here is the Bookmap futures trading system. This is the ESE minis that we're looking at, and you can see our levels for the day are posted over here. So every morning around 6 in the morning we send out our levels to all of our subscribers, and then we also create a data file which allows you to link, in this particular Bookmap system, link the CSV, and it pulls in the files for you, levels for you, automatically. So some of these levels are fairly common, right? What we're doing here is we bring in the SPX level for these three, and that's why you can see they say SPX. And this is just telling you, okay, there's a bunch of options of interest at these levels, right? 30, 50, 30, 25, and 3000. The levels that are proprietary to our models are these three that are in red. So we think all of these levels are important. But what's interesting is we have our volatility trigger, which is our own view of where the market flips from positive to negative gamma. And then we have this zero gamma level, which is where the precise level where gamma flips. And there's a difference, and we can post that and talk about that in another video, or you can read it on our site. But essentially, we calculate these as key support and resistance areas. This combo strike is another interesting one because this is a blend of the S&P big SPX contracts and then also spiders, and we run this through a separate model, and we calculate where the combined blended level is very important. So these three are proprietary levels. So if one was to say, look, 30.25, well, anybody who's reading open interest can pick that out, I would say that's possible, but these other levels are proprietary to us, and you'll see how the market reacts kind of as we get going here. So what we're going to do is we're going to try to speed this up and get this going a little bit faster so you can see how the market really reacts. And what you'll notice is that as the market trades, and when we kind of zoom back here, you'll see things kind of form a little bit cleaner. But what we're going to see is you'll see the market's now going to drift down, and it's going to test this 30.25 area. So 30.25 in the SPX, and we adjust for basically 12 points, which is what the difference is for the E-mini futures where they're trading. That's basically what the spread is between the two. And you can see as we sort of zoom out here and zoom out a little bit farther, the market starts by testing that level. And then immediately what's going to happen is it's going to rise up and it's going to test this volatility trigger level. The volatility trigger level is calculated in futures prices, and we currently have it, as you can see right here. So it's not at 30.50, which would be SPX, 30.40, which is the SPX 30.50 level. It's just above that area. And so what's fascinating is you'll see the market stop at not the 30.50 area, but our volatility trigger level. And you also see a whole bunch of liquidity form at that level, which is, to me, very fascinating. So what we'll see is you can see in these, for those who aren't familiar with the Bookmap system, it's a great system, but you can see that these dark red areas are areas of high liquidity. So the darker the red, the more orders are posted out loud at that level. So you can see here there was a bunch of liquidity, a bunch of bids were posted, and the market now is going to bounce off of this general vicinity, 30.25 and the 30.17 area. And so once it bounces off of that level, we really will see it visit this volatility trigger, and it's going to stay there and it's going to test that level for quite a while. So if I speed this up, you're going to see it's going to come up and it's going to test that neighborhood. So here we'll get this move up. You can see there's a bunch of buying pressure, and then now you can see it's starting to come in, and liquidity is starting to form at this volatility trigger area, and the market is going to bounce off of there several times. It's going to charge like a bull right at that level, and it's going to stop many, many times. And it's going to have to keep testing that area and that level. You can see how much liquidity is forming in this zone. And it meets every time it tests this volatility trigger level and pulls back. It's really quite interesting because 30.50, this corresponds to roughly 30.60 in the S&P. Not a level that has a whole bunch of options concentration at it, but it's a level that our options model picks up as a key hedging area. And so as that market rejects, you can see it's only 10:45. It's still pretty early in the day, and so we'll try to pick this up a little bit more here, make things faster for everybody. Again, we're sorry this takes so long. We had a small internet outage here for the gap. I apologize for that. And you can see we're going to pick up steam again here momentarily. and then what's going to happen is we're going to pull back and we're going to test that level again, or it's going to pull back and it's going to test that level again, and then eventually, if you were to bring up a chart of the VIX here, you would see that the VIX really gets pummeled today. It drives down all day, and so eventually you can see this liquidity at 30.50 will just get chewed up. It will start to fade away, and I think that happens because when you get volatility coming down, that changes where dealers are positioned, what they need to hedge, how they're hedging, etc., and so that will change their profile. So into the afternoon, where everybody wants to hedge, what everybody needs in terms of positions, news, etc., will sort of change in the day, and you'll see this level get tested again, and then eventually we're going to break through. And what's fascinating is we shoot like a rocket up through this area, and we're going to test 30.75 area. So I'm going to let this play for another few seconds. You can watch the action again. Notice 30.50 and the E-minis is going to get hit again. It's going to get tested again. And so if you're playing a long only game, you can use this as a place to short. And if you break through this level, you have a decent chance of going long, right? So if you're playing just a sort of a swing type trade and shorting as we get to that volatility trigger level, you can see every time it'll fade back a few handles, sometimes as much as 10 or 15 handles, and that's a beautiful long entry point when it fades off of that level. Because again, we'll keep retesting. And you'll notice the red color here, it starts to fade into, here it's now like a lighter yellow. You could just sort of tell that the resistance maybe is not quite the same as it was. Remember, it was deep dark red in the morning. And so we got a little bit longer, around 2 o'clock, so we're coming up on it, and I appreciate you staying with me here through this video. But volatility will break, and there's no real concrete news as to why we eventually break this level. There's rumors of the bank stress test comes out at 4:30. There was no news about that. We had some COVID news throughout the day, but you're going to see this pop through here finally, and there's not really a great reason as to why. There's nothing you can point to specifically other than just simply flows that finally broke through that level. So this is going to be our last sort of test down, kind of a shakeout, right? Get everybody out. And then all of a sudden we're going to reverse, and then we're going to make a real big charge here around 3 o'clock, and we're going to break through this volatility trigger level. And you can also see that the liquidity that was at 30.50 did shift higher, right? So we were deep dark red at 30.50, then it kind of faded higher, and now you can see, okay, there was the initial test and back test of the 30.50 area, and then we're just going to launch like a rocket up. And what's interesting is where we stop is at this zero gamma level, which is 30.78 in the E-minis. 30.78 is quite a random number, and so you're going to see we're going to move up right into that area, and we're going to stop. And this zero gamma level is something that we've noted many times as a very key support and resistance zone. Which marks sort of where gamma flips from positive to negative. It's sort of it's the area where you sort of have the safety of positive gamma and dealer support versus underneath. You might have a little bit underneath that level will have maybe a little bit more volatility. So, anyways, I hope these levels were helpful. You can see at 6 o'clock there's a whole lot of volume. We're right at that volatility trigger, zero gamma level, and so this was sort of a typical day of how our levels play out. I hope this was helpful. If you have any questions, please send me an email at SG, that's SpotGamma, stands for SpotGamma, SG@SpotGamma.com.